Good evening, this is Mr. Tushar Roy. This episode is meant to educate, not persuade. Whether you are a first-time homebuyer, a mid-segment upgrader, a long-term end-user, or a real estate investor, this conversation is for you. Because in Gurugram, the market today is no longer confusing. It is misunderstood. Prices are high, supply is visible everywhere, yet transactions are slowing. So the right question is not, is this a good market or a bad market? The right question is, at what price, for whom, and for what purpose does buying still make sense? Let's begin with a simple but powerful idea: purchasing threshold. A purchasing threshold is the maximum price at which demand remains natural and sustainable. Once prices cross this threshold, buyers hesitate, investors struggle to exit, marketing increases, and absorption slows. Salary-led households where affordability breaks. For salary-dependent households, the math is straightforward. Practical affordability benchmarks: EMI should ideally be either less than or equal to 30 to 35% of household income. Stretching beyond 40% creates long-term stress. What this means in real terms? For household income between rupees 20 to 25 lakh per annum, the comfortable purchase of real estate shall be between rupees 1.2 to 1.6 crore. And for household income with 30 to 5 lakh per annum, upper stretch shall be rupees 1.8 to 2.2 crore, and beyond this, affordability is breached. So the key insight is the most new launches today are above rupees 3 to 4 crore, means they are not designed for salary-led buyers. Some households look comfortable buying at higher prices because they have rental income, business cash flows, past property sale proceeds, family capital support. For them, EMI is only part of the equation. Capital rotation matters more than monthly cash flow. But even here, price discipline does matter. But when rental yield falls below 2 to 3% of the asset value and resale liquidity depends on finding another investor, risk quietly increases. Investors, the most misunderstood group. Let's talk directly to investors. Historically, real estate investing worked when entry prices were reasonable, exit demand was broad, and supply was limited. Today, the situation is different. Investor reality in current launches. Most supply is luxury or near luxury. Ticket sizes are rupees 4 to 10 crore. Buyer pool is narrow. Exit depends on sentiment, not necessity. This doesn't mean investing is wrong. It means blind investing is dangerous. The supply mismatch, what is being built versus who can buy, this is the heart of the issue. But what is being launched? High-rise luxury apartments, large unit sizes, branded residences, premium positioning, and what the majority can afford, rupees 1.2 to 2 crore homes. For compact, functional layouts and long-term livability. That gap is why inventory stays longer, resale premiums are harder, and marketing becomes aggressive. Segment-wise guidance. For the first-time buyers, do not chase launches beyond affordability. Focus on completed or near-complete projects. Prioritize EMI comfort over appreciation stories. For upgraders, upgrade only if your existing asset materially reduces leverage. Avoid assuming guaranteed resale premiums. A buy where end-user demand is visible. For investors, enter only if the entry price is conservative, your holding power is strong, and the exit is not time-bound. Avoid markets where everyone is an investor. For long-term capital allocators, focus on scarcity locations, not marketing narratives. Accept slower appreciation in exchange for stability. Is the market bad? No. Is it selective? Absolutely. This is not a crash market. It is not a boom market either. It is a filtering market. Only correctly priced products, realistic buyers, and patient capital will transact comfortably. The most important takeaway. Let me end with this. Real estate is not about timing the market. It is about respecting your threshold. When you buy within your threshold, volatility doesn't scare you. Slowdowns don't hurt you, and time works in your favor. When you buy beyond it, every market pause feels like a crisis. This is Tushar Roy speaking on behalf of BDS ESTATE. Our role is not to tell you what to buy, but to help you understand when, why, and at what level buying makes sense. Thank you for listening.